Hello trader, so it's your boy FX King and I'm here again with another video. So in this video, we'll be looking at entries. So I'll show you 5 types of entries you can use and you can improve on taking trades right. So without wasting on any of your time, let's go right into the chart. So we have entry type A here, right? So with this entry, this is basically the most widely used entry with smart money traders, right? So what you have here is you have a higher time frame POI here. Then you can see that market pushes up to a higher time frame POI. So when market pushes up to a higher time frame POI, what we're basically waiting for is for a change of characters. So looking at this, you get a change of characters here. Now this is where the trick comes in, right? After this change of character, what happens is most traders immediately mark the extreme POI here and they're waiting to sell, which we all know most of the time this doesn't work out. It's not because they marked it wrong, but it's just because of one factor that they fail to take into consideration. Sorry, let me just reduce this. Okay. So it's just because of one factor that they fail to take into consideration, right? After this their shock, what they fail to realize is they needed inducement to sell. So now with this our model, with this model I'm teaching you, right? We need inducement after shock, we need a pullback, which will be a valid pullback, and we need for price to push above that pullback. That pullback acts as our inducement. This is our level of inducement here. This acts as our inducement so that when price takes out the inducement, then it can then mitigate the extreme POI here, and then you can sell comfortably, putting your stop loss just above this last candle here. Or if you want, you can put your stop loss above the higher time frame POI, right? But you should make sure that you consider this inducement here. It's very important. So there's some circumstances whereby price will just sweep through the inducement. So when price sweeps through this inducement, it's still valid for the sell. You can sell and you put your price your stop loss just immediately above the candle that swept the inducement, right? And your target remains the same. So this is because when price takes out this inducement, even if price sweeps, price has already taken out inducement, so that's considered your valid sell already. You use single candlestick other block technique now to get this entry here. Without this inducement, right, price can just continue up. Price can just rally and continue up like this, just because there was no inducement here, and this will not be regarded as a change of characters anymore. So this inducement saves you a lot. So before you take your trade next time, make sure that you have inducement after your chalk. Then you can look for a write down. Now let's move to the second, which is this one. So this second entry doesn't require inducement. What this second entry requires is a sweep, a liquidity sweep, right? Now let's say this price is pushing up and this is a higher time frame here. And the way price taps into the higher time frame is it takes out the previous high with a wick and closes below and taps into your point of interest. When price gives you a change of character, you can then returns back to your extreme POI, you can directly sell something like this on a smaller time frame. If you change to a smaller time frame, you see something like this. So in this case, price has given our also a chalk here, and after it returns to this POI, you can immediately sell. So many people will ask you, why is it that we don't need inducement here, right? You know that inducement is part of liquidity, and at this level, price has already swept liquidity off this high. This can also be valid in case sorry, in case the wick of this candle breaks above this zone, you can still use this very technique, a single candlestick order block. When the next candle opens, closes below this one, it opens here and it needs to close below this one. When it closes and the third candle opens and pushes into to the body of this candle, you can immediately buy, put your stop loss here. So this entry is more effective than the first entry if you master it. It's more effective than the first entry, and it will be very good for you if you master this one. So those are the two entries that I'll be showing you. So I will be switching over now to the remaining three entries, right? Let me just quickly show you the last entry here before. Let me just quickly show you the last entry here before I switch over. So with this entry here, with this entry type here, right? You don't need, the people that trade this are called aggressive traders. They don't wait for confirmation or whatsoever. Once price approaches their zone, they sell. This is how the entry is. I will not recommend this for any of the traders that actually watch my channel, because this doesn't end well majority of the time. When price taps here immediately, the people are looking for sell and they sell without any confirmation. So this one is called aggressive entries. These are aggressive entries, and most of the time these entries do not end well. Now let's switch over to the next entries, which will be flip zones, flip entries, right? So I'll be showing you how you can also use flip entries to get into trades, and how to yeah, how you can use flip entries. Okay, so with flip entries, we have this example here, right? What normally happens is with this flip entry is after price taps into your point of interest, price rallies up, and our last supply zone, which is this zone here, price doesn't actually just break above and gives you a chop. What price does is price reacts from this supply zone, pushes down and creates a demand zone. When price creates this demand zone now, it then pushes up and takes out this your high. Now you have a change of characters here. Have a change of characters here. Now, in this case now, this demand zone here has turned to supply. So this is what is called a flip zone. Demand turns to supply, D to C, D to S. That's what they normally label it, D to S. So that's it. So now when price rallies up, you just need the inducement, and when the inducement is taken out and price taps into your 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 demand zone, which was created by the reaction from this supply zone here, you can look for your buy and you target up. So you should make sure that it has inducement, right? So if it doesn't have this inducement, the zone will act as inducement and price will use the first zone below here. So you should make sure you have inducement. If let's say you don't have inducement, you should make sure that price sweep this. So once price use a sweep, when price sweeps this previous low here and creates this, you can buy without inducement, because why? Price has already taken out the liquidity, but in this case price has not yet taken out the liquidity. So your inducement now becomes your liquidity, and you wait for price to take out the liquidity and rally up. If that doesn't happen, you don't have an entry. So basically the other one is you buy without inducement. Now why do you buy without inducement? If it happens that this zone was swept, you can buy and price reacts from here, gives this, you can buy here without inducement. Or this leg here swept some form of liquidity, you can buy without inducement. So guys, I'll be going into the chart and I'll be showing you some of these examples on the real-time chart, so that you can better understand, and you can go through this video 2 or more times. And if you are new to this channel, please subscribe, follow me, leave your comment on what you want me to cover next. I'll only be making videos on what you guys request from me in the comment section, right? So I also have the link to my Telegram group in the description of this video. The link to the accounts which I use, to the platform and to the broker which I use is a good broker, and I recommend it for all of you guys. It's in the description of this video. So make sure you watch this video to the end. So go over to the charts. Let me show you a better example so that you can better understand what I've been explaining to you all along. Okay, guys. So with this example, we'll start with a flip zone, right? A flip zone. So this is a trade I took on Euro JPY using the concept of the flip zone. I'll just be explaining it to you so that you can best understand what we have been talking about, right? Now, first of all, you had price tap into a higher time frame POI here. Now, if you look here, where was our last move that caused this? Where was our last order block that caused this move here? Our last supply. So we have this zone here, right? You can take a look at it. You had this zone here. If I refine it, this is what you get. This is what you get, right? Now, after price tapped into this our zone, what happened is price pushed up. Price pushed up. So when price pushed up to this zone, price could not just break the zone right away. So price gave a reaction. Now, for this reaction now, this supply zone now here turned into this demand zone. So after that happened, price finally broke above our zone here, above this zone, and gave us this change of character, a change of character at this level, right? Now, as price rallied up, we are looking for a buy, but instead of looking for the buy at this extreme, we use this flip zone here. Now, what you need to wait for is inducement. This is our inducement here. This is our inducement. This is our level of inducement here. And after inducement, we had our zone. You can see price tapped into the zone. And in the smaller time frame, we also gave a chalk. And we entered and price rallied beautifully to the upside. As you can see here, hitting our take profit. It hit our take profit. This was within some few hours. So you see here how effective the flip zone model is. You can take a look at it, screenshot it. If there is something you don't understand from this, you can leave it in a comment. I will respond to you. I respond nearly to all of my comments. So look at this. This is what I was showing you in a diagram. If you can master this, you'd reduce most of the excess risks we should take that you want to enter trades. You can see here we had a 1:7.5 risk to reward ratio, and that was a very good setup. Okay, guys, so let's go over to the chalk model, right? The chalk model, the first we talked about, right? I'll just be switching this over to a smaller time frame so that I can show you, because this is just at this level here. That's the chalk model. I'll be showing you the chalk model here so that you can use in the future. Because after price gave us this flip zone in a smaller time frame, we also took another change of characters. This adds confluence, and this is where you can add your positions. Okay, guys, so looking at this model here, right? This is a chalk model, the model most of the traders use. How do we come about this trade? So first of all, price reacts from your higher time frame POI. In this case, is the last. You see, we did not take this candle because the candle was already mitigated by this one. So we shifted until we go to the candle with the imbalance, which was this one. You mark the whole of the candle, right? So that's our higher time frame POI. After price taps into our higher time frame POI, we move to a smaller time frame, right? Now, where is our last pullback? This is the pullback here. This is a valid pullback because it took out the high of this previous candle and price push below it. It might be a week or something, but price push below this zone. So this is our change of character. We just what we need to wait for is we just wait for price to push above, close above this zone or week above. Anyone is fine. Then price should create inducement, which it did here. Then when price returns from this zone to this zone, you can buy, and that's just basically how the chalk model entry work. So guys, I think we have covered nearly everything for this video. I don't want to make this video long. Please subscribe, support a small YouTuber, and I promise I'll bring you more interesting videos which will keep you educated and which can add some few things to your knowledge which you are lacking. So have a nice day, guys.